Hi, my name is Meena Kumar, and I'll be talking about improvements and enhancements to the conventional financial statements. Financial statements are made up of several components: balance sheet, income statement, statement of cash flows, and shareholders' equity, and the notes to the financial statements. Every component is essential to the financial statement. The purpose of the balance sheet is to give a snapshot of the assets, liabilities, and net worth of a company at a specific point in time. It gives the reader a look at the financial position of the company. The income statement provides the revenues and the expenses over a specific period of time. It informs the reader about the ability of the business to generate the profit. The income statement can also be used to analyze trends in the results of company operations. The statement of cash flow shows where an entity's cash is coming from and where it is going to. The statement of cash flow separates the cash flow from operations, investing, and financing activities in a consolidated statement. Shareholders' equity measures the company's net worth. It's the difference between the net assets and total liabilities. I'll also show you an example of my several components. The notes to the financial statements provide relevant description of the items being presented in the primary financial statements. They focus on the past transactions. They talk about forward-looking information, related party disclosures, fair value measurement and disclosure, investments, loan, accounting methods, and many other items that can help the investor better understand the operation of a company. Conventional financial statements are both comprehensive and resourceful. However, there are some improvements that we can implement to better enhance the financial statements. The following items should be implemented in preparing the financial statements going forward: enhanced regulation and oversight of the financial statement disclosure. We can standardize financial reporting standards to allow comparability of financial statements. We can align internal and external reporting. We can also make easier access to the financial information through technology. And last but not least, we can also have short-form financial reporting. Now, let's discuss the first improvement. Enhancing external oversight can prevent the financial reporting abuses and can raise public confidence in the quality of the financial statement. We've seen many failures in the past few years, such as Enron in 2001 and Lehman Brothers in 2008 due to the lack of regulation and oversight. Information was misleading and fraudulent, which caused the financial disaster of 2001 and the global recession of 2008 to 2011. Regulatory bodies such as the SEC, FASB, IAS, IFRS should have strict standards and rules and standards that penalize organizations for not complying with regulations. Investors need protection from fraud, and regulatory bodies should step in and implement guidelines. Implementing regulation and overseeing what a company is doing will allow more transparency in the financial statements and business operations. The next suggestion is to standardize financial statements, especially since companies are entering into an international platform. Comparability and a common understanding of the financial statements will be beneficial to both preparers and the users of the financial statements. However, this will be costly and it will take time. Nevertheless, it will be rewarding. There are some hurdles to achieving this goal, such as a difference in culture, the financing system, religion, and accounting practices. But as a multinational player, the financial arena, the business should try to understand their financial positions. Uniform accounting standards will allow many companies to compare, for example, apples to apples. Currently, there are some countries that follow the IFRS and some countries like the US which still practice US GAAP and follow FASB. Globally accepted financial reporting standards will allow more comparability and transparency and better understanding of the business. The third suggestion is for more commentary in the financial statements about the business strategy, risk management, business performance, and any threats or concerns to the organization. Investors are seeing that capital balances on the balance sheet, but I'm sure they would be more inclined to try to understand what makes up these capital balances. Sorry, excuse me for that. The investor will be more interested in the driving forces of a business and should be warned of any threats to the business. Investors are putting their money into the organization. I'm sure they would like to know where their money is going and how it's being allocated. Now, we all know how beneficial technology is becoming for businesses. Processes and applications are becoming more user-friendly, thus becoming more easy to use and understand. An enhancement to financial statements should be to have a depository application to drop financial statements where all organizations can have access to electronic files. I'll give you an example. If we look at this document, this is from the financial statements. If we see, these are just numbers that are being shown from last year to this year. But we don't know where these numbers pretty much came from or how they've been changed. It would be nice to understand the changes and have an explanation to these changes. So what the preparers of the financial statements can do is give an explanation through an Excel file or through an analytics file explaining why these changes occurred from year to year. This is a technological advancement that we would have to implement within financial statements. Now, another advancement that we can do is to include some non-financial information about the entity, similar to a quarterly letter. Issues such as accounting controls, outsourcing of tasks, reorganization of the entity, or even threats to an organization should be discussed. I'm sure the investor would want to hear more about this kind of insight within a company. So this, I won't show you guys the company because this is an actual quarterly letter, but this is an actual quarterly letter that I obtained from one of the companies that I've worked for in the past. And in this quarterly letter, we see what really is discussed about the company. You won't see exactly, but you can see there's quite a lot of information. This talks about where the business is progressing, where its hurdles and bottlenecks are, and what problems and concerns and threats the business is having. Now, I'm sure this is the type of information that an investor wants to know. We all like seeing the numbers and seeing how the ratios are bringing in liquidity factors or even EBITDA and other ratios that we look into, but I'm sure we want to know what is causing the company to progress, what is causing the company to fail, what are the threats, what are the strengths, what are the weaknesses of the company, where is the company investing money in, or what are the driving forces of the company, how is management performing, or how is management handling any market forces that may influence their business. These things should be included in the financial statements going forward, as opposed to just having quarterly letters that are just strictly for the client themselves. So these are some of the suggestions that I thought would help conventional financial statements, and I think they would improve the knowledge of the company for the investor, and I'm sure the investor would appreciate having this kind of information in addition to the conventional financial statements. I do think these things can be implemented. I do feel there's other items that we can also discuss, such as standardizing the financial statements across all companies and countries. I know there are some cultural barriers, there are some religion barriers, there's even some accounting policies that may not be applicable to different companies that are in practice right now. But I do feel that these can be overcome. I do feel that we can come to a consensus. Like, we are all multinational companies now that are playing on an international platform. If we can have some sort of guideline where all the companies can kind of follow the same guidelines and the regulatory regulations, I think we'll be comparing apples to apples instead of apples to oranges. For example, if I'm sitting in Japan and I'm looking at the financial statements of a Japanese company, and another person sitting in America sitting and looking into an American company, I don't think they'll be able to compare the same financial statements. I think a lot of improvements need to be made since we are all becoming international game players. These are some of the suggestions that I thought would improve conventional financial statements, and I think we should implement them. I do hope that you enjoyed this presentation, and of course, please feel free to reach out to me and ask me any questions if you have. Thank you so much.